Hi, this is Dave and welcome to the weekly market recap video closing out the week for, we're already in May, Friday, May the 3rd, 2013. This is going to be a pretty quick video. I just want to highlight a couple of key markets. Let's start out as we usually do, looking at the Dow on the weekly chart. So the Dow, the news in the Dow is it broke out of this consolidation. In last week's video, if memory serves me correctly, we were looking at, the break of this trend line, but we didn't want to get on the short side until and if we did one of these scenarios where we put in a lower high or a lower low rather, found resistance, somewhere around the trend line, and then broke through to the downside, and then we'd be looking at support somewhere down in this area here around 13,800 or thereabouts. So that did not happen. What actually ended up happening was another scenario where we said we're not interested on the short side there. We're not really interested on the long side either, even though we broke this trend line, this minor trend line to the downside. So what we're actually looking at was getting out of this sort of range between 14,397 and then to the high side we were looking at resistance at these highs. Let me just mark this with red. So we're looking at a breakout of resistance around 14,800-ish. So we on Friday we punched through that level and we closed above 14,806, let's call it, above the intermediate highs going back at the beginning of April. So according to some seasonality studies that I've looked at, April tends to be the strongest month of the year on average, and that sort of played out. But I'm a little bit cautious going into May, although all technical indications are to the high side. So you can't fight the trend. And now what we're looking at here is we only had a 1-bar break of 14,800. We really need to see if we're going to start trending back to the high side, or if we're going to have some sort of a pullback coming back into the beginning of next week. So not really much to do here except to note that we did break the resistance, but it's only a 1-bar break at this point in time. So let's take a look at the sister indices and see what they're doing. So essentially I'm a cautious bull here. So let's take a look at the S&P. Same story. We broke out of the resistance here, 15.95. We're just above 1600 at closing at 1608.50. So same story as in the Dow. So everything looks in alignment there. Let's take a look at the Nasdaq. So the Nasdaq is really the pattern that I'd be interested in. We were talking about in last week's video this sort of cup and then the cup with handle pattern taking place, and if we broke out of this cup I'd be interested in this pattern. This to me is more of a tradable pattern because you have a defined pattern and you have more defined risk. So looking at this, we were looking at potentially a breakout of this pattern here with a 1272 and a 1618 extension, which would bring you into some of these levels, 2962 to 3093 ish. So I like this, but it's sort of something that you'd really need to kind of take the breakout and establish a risk at the breakout. Now we're almost at the 1272 extension, so we're slightly extended. So let's take a look at the transports. The transports, broke this downtrend line here, and we're pushing back to the high side. But we haven't actually gotten above these highs here. So in the transports, we have resistance right up and around those highs, around 62.91, 62.92. So let's take a look at some of the key currencies. Dollar index. Dollar index is right back in and around, the 82.35, 82.50. It's put in a lower low, a lower high, a lower low, and it's maybe set to put in a lower high here. The interesting thing to note in the dollar index now, though, is that, in order to get anything going there, we did a 50% retracement of the intermediate high to low, and we held the 50%, but now we're, 82.50 and 82.35, which was acting as support over the last several weeks to months, is now, acting as resistance. So that's, we've sort of put in a bit of a bearish pattern, but we're still holding the 50% retracement of this move from the low to the high, but now we need to get above 82.50 in order to get back on the bullish side of the dollar index, off of this sort of intermediate bearish pattern. So if we're trading above 82.50 on the dollar index, I'm not really that interested in the long side. Let's take a look at the euro and see what that's doing. So the euro, as would be expected, we're above the $1.30 key level, and we're starting to put in some minor bullish patterns. You can see here we put in lower highs and higher lows off of these lows, and you can see we sort of got this trend line forming to the upside. It is a sustainable trend line. It's around 45 degrees. We're above $1.30. So now the question is going to be, are we going to hold this level, hold this trend line, and push up to the high side? Okay, so we've got that in play. And then if you look at it from a fib perspective, you've got this high, this low, and we tested the 50% and we pulled back from there. So what I would sort of expect to happen here, I'm not really going to trade it, but what I would sort of expect to happen from an analysis perspective is if we hold this level here, I'd expect it to come into a $1.3363 and then around the 618 and see if we can test that level. So that's sort of what I'm looking at. You've got support now at $1.30, resistance now at $1.33.63, right at that 618 level. So that's all I have for the euro. Let's take a look at some other key markets in the commodities. Okay, so let's take a look at gold. As I highlighted in the previous video, I did take a trade in the gold, between these levels 1403 and 1479. I got out somewhere around 1462 or thereabouts. So you can see gold is actually setting up a new range in between. On the low side, support around 1440-ish, 1438, and resistance around 1480. So what I'm actually looking at, I'd like to see a better market structure. Like essentially what I'm looking at, let me just be clear here. What I'm looking at is I'd like to see this sort of market structure, and then I'd like to see, a break of 1480 and a breakthrough here to retest, this downtrend line. So that's sort of what I'm looking at. It's not setting up very clean in that fashion, but I'm essentially looking for a breakout of 1480. Let's call it 1480, and to come up and retest, somewhere around 1525 to 1550-ish. So that's essentially what I'm looking at in gold. I don't know if it's going to play out, but I'd like to see a clean break of this level first with confirmation of that break to retest some of those levels. So we'll see if that sort of takes place. Let's take a look at the, let's take a look at the silver chart. See if that's giving us any heads up. Silver, sort of the same story. It's just consolidating. So you'd really need to see, a break of the 21 exponential moving average, which is the white line there. So that's sort of what I'm looking for in order to get a test of some of these kind of levels coming down, either around that trend line or this trend line right around there. So that's kind of what I'm looking at. Now, there's not a lot of room to make a profit in here by the time it actually confirms, to retest just around 26. So that's it's not the greatest trade, and I'm not sure, unless I can get a decent risk reward out of it, I won't be taking it. But that's something that I'm sort of looking at from an analysis perspective. And then let's take a look at the crude oil. The crude oil, as we highlighted in previous videos, I'm essentially on the bullish side of crude oil here. We had support coming down here. I explained all the reasons why a couple of weeks ago in the video why I wasn't interested in getting short. What I'm actually looking for is what Thomas Bulkowski refers to as a busted pattern. So we're back into the pattern here, back into this wedge pattern, and I've marked this in last week's video. I'm looking for a breakout of the wedge pattern to the high side, the break of this downtrend line. The only issue with this is that, we've got some pretty immediate resistance between, $100 and $101 a barrel. So I like the setup. I just don't know if the risk reward makes sense or not at this given point in time. Okay, and then if you look at this from a Fib analysis perspective, from the low to the high, you've got let me just see here. You have a 618 coming up right at the breakout point. So the breaking of the 618 would make sense. It would coincide with the breaking of that downtrend line. That would put us on a net bullish side of crude oil. But having said that, we have a lot of immediate resistance overhead. So it looks great, but you know, from a risk reward perspective, I'd probably be looking at a breakout of this trend line. If I was going to take it, I'd be looking at a fairly tight stop with the expectation that, you know, the breaking of that pattern will hold without any real major pullbacks. And then I'd be looking at tightening, you know, trailing the stop up and seeing if it could get something going. So that's sort of what I'm looking at. The risk reward doesn't look great. Let's look at natural gas. Natural gas broke this downtrend line, put in a lower high. I don't really have anything here. I was looking at the breakout of this cup pattern here. It did it twice, and then it didn't follow through. So at this point in time, I'd be looking at, you know, if I were in a long trade here, potentially closing out, or, you know, looking at these lows. I mean, we do have Fib support all the way down to 371, but having said that, when this kind of pattern happens, you want it to sort of follow through pretty quickly. I probably would have called a stop out below this low here. Below this low here. If still in the trade, I would have said, you know what, I didn't actually take this trade. I'm looking at it from an analysis perspective. I'd be looking now for a stop below that low and just getting out. So this is a nice pattern, but it's just not really following through. So at this point in time, I don't really like it a lot unless it gets back up above 427. Okay, so let's take a look at the Canadian dollar, because we were looking at that from a seasonality perspective. Actually, let me run over to the seasonality chart and look at the FXC. FXC, where are you? Right here. So the seasonality, we ended the seasonality. The seasonality was essentially from the 1st of April to the 30th of April, and we didn't quite make it up to, this was where we were looking at an entry point. For those that have been watching my videos, I messed up the trade and I got in the euro by accident. I was lucky enough to get out with a small profit of, I think it was about 7% on the option, and I just got out. But essentially, this is where we were looking at getting in. We had to break through that resistance. We had a really healthy pullback, and it looked like the trade wasn't going to work. But, you know, the real support to the trade was a break of the lows. So it ended up actually pushing up right at the end of April. So from an analysis perspective, it would have been net positive on the trade, but we only made it up to the 200 period moving average, which provided the major support. That's that red line there. We didn't actually make it up to this trend line, and we didn't actually make it up to, you know, this zone. So it was sort of not a great trade, or it wouldn't have been a very great trade, and it, you know, took quite a bit of heat actually, but from the entry point, it gave a little bit more than the heat it would have taken. So I like these seasonality trades. I'm going to start watching them more. Having said that, let's take a look at another trade potentially setting up on the 30-year bond. Let me just see here. So let's look at the futures market, at US. So what I was looking at here was I was looking at a potential seasonal trade that was setting up from the seasonal start date is the 9th of May. So we're within the plus or minus 3-week window. And we were holding the breakout of this down channel. And now we had a really strong push on Friday all the way down to the 21 period exponential moving average. In this case, based on this methodology, the 20 period moving average. As long as we're holding the 50 period moving average, I like this trade. I haven't decided whether or not I want to get into it or not. We did actually have, you know, buy signal somewhere in this congestion area here when we were outperforming the S&P 500. So at this point in time, I think this is still in play. We have the potential to go higher into the 3rd of October. So I'm going to be watching this and see if this was a flush move and if we're going to push back to the high side. If I feel this was a flush move and we hold the 50 and we start pushing back off to the high side and get back above that trend line and back above the 20, I may actually consider a trade in the in the TLT using maybe a Delta 70 option. So you can see here that was just a pullback. As long as we're holding the 50, you can see the TLT has the 50 crossing the 200. So as long as we hold this area here and start pushing back off, that might still be, you know, the a flush move before the follow through of this trade. So I'm interested in, definitely interested in that. I'm going to be keeping an eye on it. So let's see, we looked at the commodity space, we looked at gold, silver, natural gas, crude oil. Is there anything else we need to look at? We looked at the key commodities, and we looked at the 30-year. So let me just look at the 30-year from this chart perspective. Same sort of idea. You know, it looks like a bit of a flush move, but we still could have continuation. Now, if you look at this chart, it looks very much like natural gas, where you sort of have this cut pattern here. You know, you sort of have this cut pattern here and sort of a double bottom. So you'd really need to get above these highs in order to get anything going to the high side from a pattern analysis perspective. And then what we'll do is next week we'll look at, if it follows through here, we'll look at where the breakout extensions above that cup would go. So that's all I really have for this week. I'm trying to keep this short to the point, and good trading. If you're still with us on this video, we have a really good CSTA meeting coming up on Wednesday of this week. That would be Wednesday the 8th from 7 to 9 p.m. So have a look at the announcements that's going to go out with this video. Good trading, and we'll look forward to seeing you at the next update or at an upcoming meeting. Good trading. See you soon.